In this video, I'm going to be showing you a live trade that I took this month that profited me $10,000 on my live account. Not only that, I'm going to share you the exact steps that I took. I'm going to give you a checklist at the end of this video. So without further ado, let's get straight into the analysis. So here is gold on the weekly time frame. Now, what we can see, a huge resistance level above price. So higher time frame perspective, we're expecting at some point price to go and break all that liquidity and take that all-time high out and make it then a new all-time high. That's what we actually are expecting for gold, because where the liquidity lies, which here it's a resistance level at around the all-time high level, we have a lot of sensitivity, but eventually price will go and take out all that liquidity, because where we have a big resistance level such as this one, we know there's a huge amount of money sitting above there in the form of stop losses, which for weekly time frame traders, potentially they have entries right about this area or somewhere near where price currently is, with a stop loss above the high, and what they're expecting is something like this, a nice meltdown where they're going to make a ton of money. No. What we're going to see at some point is price break through that high. As we go down to the daily, we can see some structure start to form. Here we have a nice bearish break to the downside. We can then see price make a full deep retracement into our final supply before making another bearish break to the downside. Not only that, but price returns to this internal structure as well. So where we have this internal high and low, we know that now there's a lot of sellers around this area. So price actually reacted from the supply, made a low and pulled back. Now that pullback comes more or less into a daily supply zone. So we can see now that there's a lot of sellers starting to step into the market where price currently is. And that's a good thing. When you can identify people going one direction, gives you an opportunity to potentially go the other way and take their liquidity up. As we step down into the 4 hour, here's where we see our big 4 hour push to the downside. Not only that, but we take out this minor support level here. So we have 1 touch, 2 touch, 3 touch. There's your sweep of support. So support's been taken. There's nothing concerning below if we are going to buy. Remembering that the majority of traders are now going short inside of this range. So they're looking for every reason to short, such as price tapping into resistance over here. Reason to short, resistance zone. We're in a bearish range. We also are bearish on the weekly, the daily. The daily's got 2 bearish breaks of structures. 4 hour internals also got a break of structure. So it's giving a lot of signs for people to start to go short. So we're going to put our thinking hats on and think, how can we actually go the other direction here? How can we take advantage of potentially people shorting early and take all of their liquidity out? First thing we notice here is that we have this little resistance level build up. And this resistance level you can actually drag out to here. So what that tells me is, okay, price had this massive push down, then we get a consolidation. So everyone that's shorting, they're going to be shorting in these areas here, these resistance zones. That is a good sign for us coming into the markets. And we can visually see when price comes into here, people are selling, 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 selling. Great. And we can visually see that. We can actually use that to our advantage, because if everyone's selling, why not catch a buy? That's exactly what we did on this day on London Open. This was Wednesday of the week that has just gone. Next thing we want to do is step down to the minute time frame, starting on the 30 minute and then going down to the 15. So first thing we notice on the 30 is just, more sensitivity across these areas, no problem. We have our price stepping up into the resistance zone. If I jump down into the 15, and I will just, actually I won't hit the replay. You can see the trade is here. It has happened on the chart, but I just want to explain to you on the 15 what is happening here. So what we can see, after price taps into this resistance, we get a big push down. We then get a consolidation and price returns into the area again, into the resistance level one more time. So how do we take a trade? First thing, again, we can look at the 5 minute. We can see it's not really showing us anything too clean, maybe a small break of structure here. But again, we go to the 1 minute just for some clearer structure. That's exactly what we do. So as we go down into the 1 minute, we can clearly see gold had a bearish break to the downside, creating a supply zone here. So now we have the daily doing 2 breaks of structures, both an external and internal structure. We have the 4 hour external and internal also showing bearish structure, the 1 hour, and now we're also getting price tapping back into a resistance, breaking structure on the 1 minute. So people are going to look at this 2 different ways, right? You got your structure traders, so they're going to see a bullish break here, they're going to see a bullish break here, they're going to see a bullish range coming up into here. People are going to look at this in several ways. What does the bearish break indicate? To them, it indicates that price is going to come back into potentially their demand zone. Then they're going to potentially get another 1 minute break with a supply. They're going to be entering this, and that's the move that they're looking for. Does that happen? 9 times out of 10, not really. But that's why we might get that bearish break coming into London Open. Again, we want to look at why price is doing what it's doing, reasons it's doing what it's doing, and it gives us more confidence to get into a trade. So in terms of getting into this trade, we know there's going to be a lot of sellers here. So there's a lot of sellers jumping in, stop losses are going to be above here. And that is why oftentimes we get this big push that takes that level out. It's no accident, it's really programmed into price. So we know everyone's selling, we know where they're selling, we know where their stop losses are, we know that this is also at a resistance zone, a small resistance zone here. Boom, price takes the liquidity out and then just misses the target, comes back and finally hits it. So you can see it's no accident why price does what it does. In fact, it just really tries to trap people going the opposite direction to then move in the opposite direction, take all that liquidity out, and then continue on with its move. Now in this case here, it was a very nice trade, 1 to 2. Again, simply targeting a 1 to 2, which I do sometimes just above, just to make it a true 1 to 2. But yeah, beautiful, beautiful trade. Targeting a clean level here of 3360, which it did hit perfectly. So the only other thing we need to consider in a trade like this is look at this, we have a support zone. So if we have a support zone, we must cover at least that low of the support. So if this trade has taken out the support and pulled back into here, we could have gone into here at this level, better entry. We could have even had a better stop loss, nice and tight. But in this case, we had to leave a little bit more room just in case price wanted to come and take that support level out before going to the upside. But overall, we're still a very nice trade, 1 to 2.2, 1 to 2, let's say. Risk to reward achieved, 22.9 pips and stop loss. Very, very, very clean, obvious, yes, but it's just a matter of finding where the liquidity is. And price will want to go and aggressively target that. Time and time again, we see this in the markets. Amazing, amazing stuff. All right, guys, so quick checklist. Basically what we need to do at the start is establish your higher time frame bias. Where is the real liquidity sitting? And if you check the weekly, we saw we had a huge resistance level above price. So obviously, higher time frame, we're expecting price to take that, but it could take weeks, months, several months. We don't know when it's gonna happen. We just have a bias that it will. After dropping down to the hourly time frames, first 4 hour, of course, we'll look at the daily, then the 4 hour and the hour time frames, we start to develop more of an intraday bias. So once we've looked at the weekly, then the daily, we go down to the 4 hour, the 1 hour, we're checking out intraday bias, seeing that, okay, we now know that a higher time frame is, for example, random example, bullish. Now, but our intraday 4 hour is bearish. Why? Maybe people are looking for price to go lower inside of maybe the daily or the weekly range. That gives us a bias. Now, if we're finding liquidity above price, we can actually do the opposite and actually buy into those sellers' liquidity and take all their liquidity out and make a new higher high. So we look for these sort of things on the 4 hour. Also on the 15 and the 30 minute, we're gonna see very much intraday plays. So again, if we wanna sell, we see if all the liquidity is below price, right? We wanna sell into that liquidity. We want to look for, say, a 15-minute bullish break of structure. If we get that 15-minute bullish break of structure, it's giving us confluences to actually go short. Now we need to look for maybe a support level to be taken out, a 1 minute manipulation, get into a sell, take their liquidity out. After, of course, 15 minute, you want to check the 3 minute time frames. 3 minute time frames, meaning 1, 5, and 15. They are in confluence with each other. So, of course, hourly, 4 hours, more your intraday, 15 somewhat intraday as well, but you can also use that for entries. Then 1, 5, 15 is your entry time frame. So you can enter on the 15 minute, 1 minute, or the 5 minute. Depends on the setup, depends on the entry, depends also on our stop loss as well, how tight we want to make that. Lower the time frame, the more manipulation we can see, maybe on the 1 minute, of course we can get a tighter stop loss there versus just entering based on a 15 or a 5 minute move. So something to consider. And of course, that's what we get our entries as well. So guys, if you want to learn how you can actually get second guessing every entry that you make, finally hold trades with confidence, knowing why you're getting in and why you're getting out, and trade with a repeatable plan, not emotion or guesswork, That is why I created the Currency Squad, and there is a full course down below. So link in the description, full course down below, where you can actually learn from me for free. And of course, if you like what you see, would love to work together and take this one step further or 10 steps further for you and really create a life of freedom and abundance through trading. But guys, thank you for watching this video. Make sure to like, comment, and subscribe. I'll see you on the next one. Thank you.